The most sophisticated gold trap of 2025. Wake up before it's too late. Behind the 2025 gold rush, not just price, but a sophisticated trap. The gold frenzy in 2025 isn't just about rising prices, it's a carefully designed trap. If you don't understand how it works, you could lose everything. Gold, at its peak of hype, draws every eye as if it's the ultimate lifeline in a financial storm. Two simple words. Gold rush carry some of the deepest lessons about greed and the need for clear-headedness in investing. As we step into 2025, the global gold market is entering uncharted territory. A peak of expectations. Everyone's watching gold, convinced it's the final safe haven. Crowd psychology, fueled by a fierce belief that gold will keep climbing, is driving this mania. People think missing out now means losing the decade's biggest chance to get rich. But here's the danger. When everyone agrees on the same outcome, the market often flips the script. It wipes out the weak, the latecomers, and those blindly chasing the myth that gold never loses value. Financial experts have long warned, when every investor is talking about an asset, it's usually no longer a good deal. History proves this. Gold's strongest rallies always come with sky-high expectations, followed by crashes few see coming. Take 2011, gold hit nearly 19,200 per ounce amid Europe's debt crisis and global financial unrest. Everyone thought it would soar to $2,500 or even $3,000. Instead, it plummeted for years, taking nearly a decade to recover. Investors who bought at the top, driven by FOMO, fear of missing out, were stuck with losses, locked up capital, and broken confidence, only to quit just as real opportunities returned. In 2025, we're seeing eerie parallels. Gold keeps breaking key resistance levels. Financial media bombards us with headlines about a global gold rush. Speculative money floods into physical gold, gold accounts, and ETFs. Investment forums buzz with buy now or regret it advice, spreading FOMO across all kinds of investors. Even those who never cared about gold before. People with little cash scrape together what they can, while big players pile in recklessly. This is when the trap takes shape, not through an instant crash, but through overwhelming consensus that makes the market ripe for manipulation. Here's a timeless market rule. Rapid price spikes and heavy inflows signal danger, not at the bottom, but at the peak of hype. When expectations hit their limit, the only thing left is surprise. Buying an asset, just because you think it'll keep rising, without a risk plan, is a recipe for disaster. Every asset has a cycle. When prices reflect all the optimism, there's no fuel left to climb. One negative spark, a rate hike, a rumor can trigger a fast, brutal correction, wiping out gains and capital from those who jumped in at the wrong time. Worse, many are pulling money from other investments or even borrowing to chase gold, believing it's the safest bet. But gold doesn't generate income. When global interest rates shift, the cost of holding it rises. Investors may pay dearly for their impatience and lack of caution. The 2025 gold trap isn't a sudden drop. It's a prolonged climb that lulls people into thinking prices can't fall. When the reversal hits, they're too slow to react. Stuck at the top. Gold's role in finance is undeniable, but believing it's a quick path to riches is a dangerous illusion. When it's the hottest topic on social media, coffee shops, offices, and investment groups, that's a red flag. The market's entering high-risk territory. In finance, traps don't lie in the asset itself. They hide in greed and ignorance. If you don't see gold for what it is, it can bury your wealth, especially if you join the party too late. The real pain isn't just losing money. It's realizing you got swept up in the hype when you should have stayed sharp. 2 harsh truths about physical gold: safe haven or silent trap. Most investors see physical gold bars, coins, jewelry as the ultimate safety net. It's tangible, independent, and feels secure. But that blind trust can blind them to hidden risks piling up beneath the surface. With geopolitical tensions, financial chaos, and supply chain disruptions, physical gold isn't the risk-free choice people assume. The trap isn't obvious. It's in thinking ownership equals peace of mind, while silent dangers erode your wealth unnoticed. First, liquidity risk. Not all gold is easy to sell in chaotic markets. Big brand gold with international certification moves fast, but jewelry or sketchy coins, good luck. During a crisis, buyers vanish, sellers flood the market, and bid-ask spreads widen. You might hold real gold, but can't sell it for a fair price. What's the value of an asset you can't cash out? It's a hollow promise, especially when markets swing hard. Second, storage and security risks. Physical gold needs safeguarding. Storing it at home risks theft or loss. Professional vaults cost money eating into your turns, and few small investors budget for that. The bigger your stash, the more you worry. It's not just about safety. It's the stress and hidden costs that chip away at your wealth before you even see a profit. Third, quality and source risks. Fake gold, impure bars, and shady dealers aren't rare. Verifying quality isn't simple, especially for novices. Buy from the wrong place, and you might end up with junk you can't sell, or sell only at a steep loss. You thought you secured an asset. Instead, you got a costly lesson in trust. Fourth, low flexibility. In today's fast-moving financial world, you need agility to shift investments. Physical gold lags. It's slow to sell, hard to convert quickly, and ties you down when markets demand quick decisions. That timeless value can leave you a step behind, missing opportunities, or worse, losing capital. The biggest risk isn't a price crash. It's not realizing these traps exist. The pain creeps in slowly. You can't sell, can't protect, can't pivot. No asset is risk-proof. And physical gold's limits can cost you not just money, but peace of mind and chances you can't buy back. How gold gets manipulated. The big players' game. Gold prices don't move naturally. As many assume, behind the random swings are invisible hands, powerful institutions with the cash, info, and tools to steer markets. Gold isn't just a safe haven. It's a weapon for manipulating crowd psychology. A fake order, a hyped rumor, or an exaggerated crisis can jolt the market, pushing small investors into panic or greed. In those moments, the big fish profit while the little ones drown. big players, like hedge funds, central banks, and financial giants, use tricks like spoofing, placing huge buy or sell orders they never intend to execute, just to fake supply or demand. Prices spike or crash, and the crowd reacts, buying high in a frenzy or selling low in fear. The manipulators win either way, controlling the game's rhythm. Take 2013, gold tanked in days after a long plateau. The surface story was weak demand from China and India, but the real move was massive sell-offs by institutions, triggering automated stop-loss orders from millions of small traders. Prices crashed harder. Then the same big players bought back at the bottom. Shake the tree, grab the fruit. Media's in on it too. Floods of reports, forecasts, and expert take shape. What you think is reality, but it's often a script. Once small investors buy into gold's going higher or sell now or lose, they're locked into the plan. The trap isn't gold itself. It's the puppet masters. If you don't see the strings, you're just a pawn, reacting late and losing big. In 2025, with wild swings, huge liquidity, and info overload, missing the big players' game puts you at their mercy. You can't control gold prices, but you can control your moves. Losers follow the waves blindly. Winners step back, spot the setup, and act, or don't, on their terms. 2025 gold, cash flow shift, or big players cashing out. Gold doesn't spike randomly. Big waves come from money moving, and one slick trick the pros use is shifting the fire. When stocks tank or real estate freezes, speculative cash flows into gold, sparking fake rallies. Small investors misread it as a trend, jumping into a liquidity trap. When the money pulls out fast, markets don't reward followers, especially those chasing a shelter that's only temporary, not a long-term gold mine. When stocks crash or property loans dry up, cash doesn't sit still. It floods gold, driving quick, sharp gains. Media and influencers hype it as a safe haven, triggering FOMO. But this isn't real demand. It's a dodge. In 2008, after Lehman Brothers collapsed, gold surged as a refuge. 6 months later, when markets stabilized, it corrected hard as cash flowed back to higher yield assets. Late buyers got stuck for years. The trap's in the timing. Big money doesn't warn you when it leaves. Gold doesn't pay dividends or rent. When stability returns, cash ditches it for stocks or bonds. Holding too long is like staying on an empty ship, safe until it's not. In 2025, mistaking this short-term dodge for a lasting boom could lock you into a dead asset, while opportunities shift elsewhere. Leverage. The hidden killer in gold investing. Leverage, borrowing to buy more gold, promises big wins, but can wipe you out fast. Gold's meant to preserve value, not for gambling with debt. Greed lures people in, and the safe myth makes them think it's fine. One wrong move, and you don't just lose cash, you lose hope and years of recovery. Here's how it works. Borrow to buy gold, or use margin to control more than you can afford. If prices rise, profits soar, but a small dip. Losses explode. A 10% drop with 5 payroll leverage means 50% gone. In August 2020, gold fell 13% in 2 weeks. Normal for markets, but leveraged traders got crushed. Accounts liquidated before prices bounced back. The market moved on. They didn't. Borrowing for physical gold's worse. If prices stall, you're stuck with debt and no income from the asset to cover it. Leverage isn't a tool for most. It's a trap for the unprepared, amplifying greed and blurring risk until it's too late. FOMO and layered media. Who wins in the gold rush? FOMO, fear of missing out, doesn't just happen, it's engineered. Media, YouTubers, and influencers flood the airwaves with buy now urgency. When gold climbs, the hype explodes. Don't miss the decade's big win. Small investors dive in, not because they get gold's value, but because they fear being left out. The real winners, those who bought early, sparked the buzz, and sold as you rushed in. Big players offload their stash at the peak, while latecomers buy into the frenzy. When the noise fades, prices stall or drop, leaving them trapped. FOMO clouds judgment. You don't ask who's driving the surge or why, you just act. The pros cash out, you're left holding the bag. Gold cycle. Where are we in 2025? Every asset has a cycle. Growth, distribution, correction, accumulation. Gold's no exception. History shows 10-year loops. 2001, 2011. Saw it leap from $300 to $1 in 1920 bus, then crash 45% by 2015. Today, from a 2015 low of $1,050, it's nearing $22,000 2025. The growth phase is fading. We're at distribution, where smart money exits and dreamers pile in. Prices may hover, teasing stability. But when big cash pulls out, the drop hits hard. Buy now, and you're not chasing gains. You're catching a falling knife. The cycle doesn't lie. It just doesn't care if you see it. Rebalancing. Gold's just one piece, not the whole puzzle. In 2025, gold isn't for dreamers. It's a proving ground for discipline. With volatility and hype swirling, the real victory is protecting your wealth, not losing outshines, chasing wins. Gold's a tool, not a miracle. Buy low, sell sharp, and never go all in. For this stretch, we lean on a guerrilla strategy. Strike fast, lock in profits, and get out. We can't pinpoint the exact peak without a crystal ball. But we can surf the market's last surge and jump before the plunge, keeping every gain intact. Overplay it, and you're not secure. You're trapped. Survivors don't chase peaks. They dodge pits. Own gold sensibly. No loans, no leverage, and always have an exit plan. The real victory? Staying in the game when the storm passes. That's 2025's lesson. Gold's a chance, but only if you play it sharp. Due to time limits, we'll stop here. We share free insights on becoming rich entrepreneurs, investors, and financially free. Don't miss out. Subscribe, turn on notifications, share this video. I sincerely wish supporters achieve financial freedom soon. If just 1 or 2 lines here help your life, I'm fulfilled. I'm FortuneCraft. See you in the next video. Goodbye.